Hello and welcome to my stock scanner. It is time for a little video where we take a look at Tesla versus the Chinese BYD, that is the competitor from the big China. Well, about half a year ago, back in July 2024, I made a video called Tesla versus BYD, and I will try to revisit that. I'll show you why I made the decision to invest in BYD in Tesla back then. I'm going to have a look at how the stocks have gone so far, and then I'll have a look at what I would do today if I were to take the decision of one of the stocks over the other. So let's have a quick look. Last year, on the 8th or 9th of July, somewhere here, I made a video about the BYD versus Tesla. And I took a position in that myself. I disclaimed that quite clearly. Since then, the stock has gone up something like 45%. However, with some big swings, it was up a lot here and all of a sudden it was down 23%. But it followed the trend line fairly well that I had put in. All right, Tesla, on the other hand, well, I think we all know this story about Tesla here because more people are following it, and I said back here that I thought this was the top for Tesla. Little did I know that Donald Trump would be elected and that Musk and Trump would be best pals, and that was basically what lifted the stocks up to highs here. It went up about 100%, but today it has dropped a lot. Closing yesterday, it's up 32% since I made my video. And there is some pre-market suggesting it should go even lower. So as of right now, my BYD has outperformed Tesla. Now I know that had we measured this back here in December, then Tesla would have outperformed BYD. But that doesn't matter because what I'm going to show you today is the 3-point playbook and why I took the decision I did and why I would take it again all over if I had the same choice. The 3-point playbook, if you don't know it already, is where we use our My Stock Scanner platform here to have a look at the stocks. First of all, we ask ourselves 3 questions. The first, is it a good, solid, quality stock? If yes, we go on to the next question, which is it correctly priced? Meaning, is there a good upside potential in it? And 3, is the timing good? Today, I'm going to have a look at the first 2 mainly. So let's have a quick look. And we can start out with Tesla and just compare them side by side here. Tesla has a quality of 81 on a score from 0 to 100. That is absolutely a good quality. Comparing that to BYD that has a quality of 92, well, that is of course better. If we're looking at Tesla again, scrolling down, we can see there is the PEG ratio. Now, if you don't know it, the PEG ratio is the price earning divided by the expected growth. Now, Tesla did have a terrible year on their earnings per share last year. Now, analysts are expecting this year to be better with a positive earnings per share growth of 44%. Personally, I doubt that. And that is because there is a big movement away from Tesla, at least if you believe in what all the auto medias are writing. People simply don't want it because they don't like the Musk interference in US and European politics. If that is correct, I have no idea. However, if it's we let this stand and assume it's correct, then there will be a PEG ratio of 3.7. That is too high. I want one between 2 and 2.5. And if we are looking at the BYD, we can see it has a PEG ratio of 1.0. That is just the perfect Goldilocks zone here. So PEG ratio is a lot better. And if we're looking at some of the, you could say the normal valuation areas down here, we can see that Tesla has an insane price earning at 162. Price to book, which means how much are you paying more than the company's actually worth of the values inside the company. You're paying 15 times the value here. And when you're looking at BYD, it has a price earning of a lot more reasonable 28 and a price to book at 5.7. Still in the high end, but only a third of Tesla here. We can see the price to sales, which is quite high here, 12. At BYD, it's about 1/10 of that. So overall on these valuation metrics, BYD is beating Tesla. I know that the normal investors in Tesla are not normally looking at these valuation metrics, and that can be okay if you really expect some massive growth. Now looking at Tesla here again, they are growing their revenue, definitely, and so is BYD. This is in the Chinese currency, so we can't compare it directly numbers to numbers. We can see that the earnings per share growth is a bit smaller than the one expected in Tesla, but still you're paying 163 almost in price earning, and here you're paying at 28. That means if the price of the stock didn't go anywhere and you just had to live off the earnings the company made, it would take you 28 years to earn back your investment in the stock from the BYD here. But in Tesla, it would take you 163 years, which is, well, quite a lot. Going down here, we can see that the margins in Tesla has been dropping. Let's just zoom a bit out here. The margins were one of the big reasons why we were told that Tesla could have a very high pricing, because they had higher margins than anyone, and the margins were just going to the moon. And it seemed that way here. But then it started to drop off, and it seems like the margins are falling. Now, if it is true that the earnings per share could go up, well, then the margins might go up this year. But if we're looking at this, it's basically cut in half, the margins. If we're looking at the margins here, we can see that they have gone from a low here at 3.5 and then to 6.3. Not doubled completely, but on its right way. So the margins are actually very, very close to the margins of Tesla, which is interesting. If you're looking at the return on capital employed, meaning how much return are they getting on the money they actually have put into the company, that could be stock shareholder equity, it could be borrowed money, it could be anything. We can see that return on capital employed have dropped dramatically, whereas in BYD it has actually gone up from a low point at 6 to now 18. So overall, BYD is a winner here, just looking at the numbers. And I know some of you, and I hear that every time I talk about Tesla, you're saying, yeah, well, you can't really compare the two, because Tesla is so much more than a car manufacturer. Well, the funny thing is that so is BYD. They started out as a battery maker. And I know Tesla, they have humanoid robots and solar panels and batteries and AI and supercomputers and cars and full self-driving. But BYD actually just launched, let me see here, BYD's new self-driving tech aims to rival Tesla with DeepSeek AI integration. Now, I have no idea if they are going to get better than Tesla. I have no idea. However, everyone out there are trying to beat Tesla. That means that on full self-driving, there are at least 10 companies trying to beat them. A couple of them already have full self-driving taxis, with which Tesla don't even have yet. Then there are the battery makers. There are maybe 100 different producers aiming to beat Tesla. Then there are humanoid robots. There are 50 to 100 competitors, direct competitors to Tesla in this area. And what I'm saying is, and what we're going to have a look at just in a second, is that the pricing part. In that pricing, Tesla is basically priced as if they are going to win every single of these niches. Humanoid robots, AI, EVs, full self-driving, everything. And my prediction is that they are not. And if they are not, then a PE of 163, that is completely overpriced. Let's have a look at it. Our system here is based on looking at earnings per share and price earning, meaning that we are multiplying the two. We are saying earnings per share multiplied by price earning gives a certain price. Now, we are using the earnings per share that the analysts are predicting, and I'm not sure about this. I don't think Tesla will actually grow their earnings by this much, but let's just keep these for the sake of the argument. Now, as you can see here, if Tesla, and these are numbers that our system suggests, and they are derived from both some historical numbers and different factors here. But the system has suggested between 92 and 138 for Tesla. Now, if that is our bear case and our bull case, then it looks fairly well for Tesla. Then it looks like they are very well priced. There's a bear case where if they only sell at 92 in price earning, and of course they reach their earnings per share growth, then they're going to go up by 8% over the next couple of years, whereas a bull case gives us 62%. Now, looking into the BYD, first of all, we have the 2024 here. We should actually add another year if we wanted to compare the same, and that's because we don't have the numbers for BYD in the system. So if it should be completely fair, we should add another year here and just assume that they are going to grow with the same amount of percentages. And if we do that, we can see that BYD, with just 22, 27, and 33 in price earning, way lower than Tesla. They are producing, as you can see here, this is to the end of 2026, and so is this. Then BYD will be producing between 40 and 110% in performance. So you could say the 22 to 33, is that a more fair assessment of the price earning? I think it is, because we need to realize that having a price earning means that there's a lot of trust in the future of the company. The investors are really believing that this company can grow insanely quick and way into the future. Now, if investors should start to realize and maybe be a bit frightened of Elon Musk's reputation deteriorating in Europe, China, they have given full self-driving, or at least partially full self-driving. They have given licenses to that to 5 or 7 Chinese EV makers, but they haven't given it fully to Tesla yet. So they might be freezing Tesla out of China, who knows. But let's just say that the investors lower their price earnings a bit, what they're willing to pay. Let's say they lower it to still being double of BYD. Then we would have a Tesla at a PE at 44 in the bear case, 54 in the bearish case, and 66 in the bull case. If so, and these are numbers that Tesla have traded at before, if so, we would have a bull case where Tesla drops 23%, whereas the bear case is a drop of almost 50%. So when I look at this case, and I'm saying to myself, okay, we have 2 EV automakers here. And if we're looking at the numbers, we can see that Tesla outperformed BYD a lot in the beginning. And now BYD are actually basically the same as Tesla. I know that you can argue, is it all EVs or are there some hybrid electric vehicles as well? However, this is a close race, and I think BYD will pass Tesla by a lot here in 2025. So knowing that growth and looking at that a lot lower price earning that we are paying, I would today, if I were to still choose BYD. Now it has gone up quite a lot here, so on a technical timing part, I might wait for a little retracement and then try to take a bounce here. Tesla, well, what I've been saying for a while is that back here, this is where this was actually here, I made the video. I said I think this is the top price Tesla is going to. Now, little did I know, as I mentioned, the bromance between Musk and Trump, and that is what has lifted this. There were no fundamentals lifting this one. It was all expectations that Musk might get a lot of benefits from this collaboration. And what I said was, give it a while and see if the stock won't come back to this price again, and then we can take it from there. If it does, it needs to drop another, 20-25%, which means the ones that bought on the hype up here would then be down roughly 50%. So Do I know where the stocks are going? No, absolutely not. It could be that today Tesla is turning around and going up 1,000%, and it could be that BYD is going to the grave or dropping 50%. I have no way of knowing. When I invest on probabilities. And I can just say that buying into something that is such extremely overpriced and priced for perfection as Tesla is up here, compared to something like BYD, I know what I would take any time a day. I would take BYD, not knowing where it would go, but just knowing that I'm putting the odds in my favor. That's all for now. I hope you like my conclusion, and you're welcome to give me comments and feedback. Bye for now.